as we've discussed, I mean, operating as a truly global transaction banking is more challenging than it ever has been before. I mean, and one of the reasons for that is globalization is taking place in the industry. So, I mean, Harry, I might let you lead off with this one, but obviously, you know, as I said,
that's not what it says in the script.
Globalization is present and it's obvious all around us. I mean, how does that affect the transaction banking world? And we're seeing new trade flows, new relationships being forged.
Well, the globalization is, and for that matter, regional variation is actually I think a schizophrenic one. Globalization is true. It is becoming more global, and you see it in a number of ways. You see more trade flows globally. You see the whole place becoming more interconnected in shorter timescales. That's true. At the same time, I think one of the products of the crisis is more regional variation, and I think that's particularly true when you start looking at what people are building in financial landscapes. One of the outcomes of the crisis, for example, is that you can no longer expect countries like China and India to follow, you know, London and New York in terms of how they develop. It's no longer the case that one can say, look at this great example. It's just not. It's not so credible anymore. And there is a resurgence in their confidence in what they expect to do, and quite right too. If you look at this from a macro, you know, historic level, of course that's going to happen. So there is globalization, there is greater standardization, and then actually if you look at what people are doing, there's more regional variation starting to come in and people doing it their own way for their own market. So the challenge is going to be to deal with globalization and at the same time deal with all those big local markets that you want to be in. And it is becoming, I'd say, a different it's almost schizophrenic setup, I think.
So sort of more need to do business globally, but in some cases it's kind of harder to do.
Yeah, but more variation in terms of how one actually has to deal with that.
I think certainly, and one of the things that plays into that is the regulatory landscape as well, in the sense that one of our continued frustrations is the lack of consistency when we see regulation applied. Whether that's in a European context or in a global context, and I suspect when you look forward at Basel III, you'll see the same impacts as there are regional and national variations in terms of the approach, and of course that then drives market opportunity and market differences in terms of the way you deliver in those environments. I think the other part of that is purely the cultural element in terms of how business is done, driven by the trade flows that we're seeing. And certainly, when you look at Asia specifically and the development of the renminbi, that again is something that has been forged out of the market needing to respond and grow in that particular way. And again, sort of banks are choosing, and again, I think generally that's driven by their customer franchise, choosing whether they need to invest and operate and build systems in those arenas or not.
So the cultural element's an interesting one. Are you seeing kind of different demands from different businesses in Asia as opposed to Europe and the US, for example?
Businesses do operate in different ways, driven by the regional and national in some instances. And again, I think if you look at even if you look specifically within Europe, there's quite a difference between the way business is done in the Nordic countries and the way technology has been driven into the way that things are delivered in the Nordic countries, whereas where perhaps if you look at the southern European countries, the market is very different demands for different products because we operate in different ways. And I think that adds challenges to banks that want to operate across multiple countries, because it's not a simple one size fits all. But I think what that does mean is that you can work with partners to mix and match your customer proposition so that you get the right set of facilities for your clients.
Sure. So, Peter, I'll put this one to you. Obviously, regulation's your speciality, but I mean, what kind of issues might a kind of fragmented regulatory landscape globally cause for Martha?
Well, for a start, your offering to your customer gives them a documentation pack that looks like this, and that's not attractive for anybody except possibly those of us who write them, but even then it's not a lot of fun. And it's true even within Europe, where the market has become much more harmonised. The thing about a choir that sings in harmony is they all sing different notes, not the same ones. So the rules are not as harmonised as they ought to be. And one of the challenges is how you offer your client, a global window on your business. How do you let them have one access, one entry point with you, which can access whatever you've got in terms of an international network with the relevant local regulatory capacity and capability? Or do you have to partner with someone locally to access their license? And if so, are you going to have to do business with your competitors? How do you feel about that? So there are a number of different ways you can approach it, but they certainly bring their own challenges.
So as far as potential competitive conflicts go, what's your take on that, Julian?
Well, I think it's one of the interesting things about clearly the regionalisation, but also just differences in countries around the world is you do have different growth rates. So coming back to the point I was making earlier around GDP and interest rates being a core lever for the revenue growth of this business, if you are operating in countries of higher GDP rates and higher interest rates, it's clearly a more attractive business in terms of growing your own business. And I think there are a number of banks at the moment looking at saying, do we truly understand the needs of our customers and where they are actually trading, and do we have the right coverage to support that trading? Are we really following our customers? And that's not necessarily a total coverage model of all countries. It's a very specific model around the customer and their franchise. I think the other observation I'd make is the sort of the other layer, with the other emerging layer, which is some of the virtual marketplaces that are emerging and just crossing all of those boundaries. And there's India Mart, Alibaba. Interestingly enough, both come out of fast-growing emerging countries, linking, and it's primarily around sort of counterparty identification and price negotiation now. But Alibaba through Alipay is beginning to move to a settlement-based model, and there's a danger actually that those models increasingly bypass current regulation and current bank coverage. And I think they're very early stage. It's difficult. We've been through this cycle 10 years ago, so who knows where it'll end up? But they are things we have to watch very carefully. They may change the way we transact with each other.
Jerry, how does the technology piece play in here?
Well, I was going to just pick up on a couple of those points. I think in your introduction, you said the rise of the transaction bank over the last decade. That effectively was a relatively few number of banks offering ostensibly global reach and global range, effectively reach and range. And I think the amalgamation of Kevin's point and Harry's point and Julian's point is that combinations of having to know your customer really well, the regulatory effects, the regional regulatory effects, the cost of doing business, and this competition that we mentioned earlier on, I think the effect of all of that is that you will start to see less global reach and range and more regionalisation or specialisms depending upon local knowledge, depending on, as Kevin said, your client relationships and how they want to do business. So I think there's a new model here which is not global reach and range, it is reach and range for my customers, and I will partner, as Kevin said at the beginning, with somebody else to handle the other bit of that customer relationship that I can't do in Asia Pac or I can't do in Europe or wherever it might be. So I think you'll see a slightly, the offer to the customer may well be the same, but the way you actually deliver that offer will be slightly different than it would have been 4 or 5 years ago. And so therefore, from a technology point of view, I'm not tooling up with technology to do everything everywhere. I'm tooling up to do a particular type of technology in a particular currency or a particular instrument type or a particular business area. Yeah?
So it's playing to strengths. And
yeah, absolutely.
Might we see retrenchment from some of the players at the moment who are looking to provide a kind of truly global reach?
I think some of them will have to revisit their models because of the cost of those models are high, and as we've said, if you get more entrants, then something's got to give somewhere, and there's going to be a pricing issue and how you keep the pricing up. So I think there's got to be a revisiting of that. It doesn't necessarily mean there'll be a retrenchment, but I certainly think they've got to revisit those business models.
Yeah.
It'll be a revision of the how they do
absolutely.
it.
Yeah.
And to be fair, some of those business models are being driven by an expectation of standardisation that's not going to be fulfilled in the time frame that it was originally envisaged. And I think that's one of the things that is starting to challenge. And actually that's an issue for our clients as well, particularly the multinational clients who have also started to anticipate those standards becoming more uniform, and that hasn't happened. And of course they've invested as well. So I think that again this creates potentially opportunities for not necessarily banks but for technology firms to act as integrators or act as translators from one format to another.
I absolutely agree on the everything everywhere is a very difficult model to support at the moment. But I think a pure local model is also challenging, and it's being able to bank the trade corridors of your clients and the real value of being able to bank both ends of that trade corridor. And that isn't a cover all countries everywhere. It's a very specific understanding of your client needs.
Yeah.
So we've talked a bit about currencies and also Asia. I mean, I think we should touch on very very briefly. I mean, last year we saw a bit of a rush with everyone trying to start offering renminbi as a trade settlement currency. I mean, how important is that for banks and their customers at the moment?
I guess from a bank perspective, I mean, it clearly is a growing importance, and certainly as being one of the first banks to be a clearer of renminbi, it's got a certain importance for us, for our clients, in terms of supporting them going forward. I think what we are starting to see is that internationalisation is starting to grow, and I think it's one of those areas that's going to be quite prudent in the sense that those banks that require to support it and want to clear for their clients and support their clients in terms of the activity they do will do so. But I think it's not one of these things that's going to drastically change rapidly the marketplace, but it will over time become exceedingly important.
Sure. So we're not suddenly going to see dollar and euros preeminent position eroded in a year
it's
or two.
Interesting. I mean, it depends. With the current environment, you can't really judge the pace. But I think the implementation of it has been very prudent in terms of the approach. I think it's been well controlled and well delivered. And I think the banks that are supporting and investing and growing from a client perspective are finding it very fruitful in terms of business.
And there's also an effect here, and I may well be wrong, but an effect here of Chinese corporates and how they do business outside of China. Obviously here in London we've got Japanese banks who look after their Japanese corporates who are doing business in Europe. We've yet to see large Chinese banks coming to London and setting up big facilities for their own customers.
They're starting to.
I was going to say, and that's the point. Yes, so they're starting to,
so,
and so therefore won't that change the? That change that relationship?
I think you'll start to see London being a clearing centre for renminbi as well.
Yeah. Okay.
So again,
yes.
it will start to happen. The big Chinese banks are opening branches in London, and they are building capability.
Yes.
Of course, the challenge will not be them servicing their customers in the UK. It'll be them using their balance sheets to service the UK's banks' customers in the UK. And that will be the really interesting.
Yes, that will be. So I think it's a bit of that, isn't it? So at the moment it's sort of not quite one way, is it? But it's sort of one way in a funny sort of way, and that's what will bring about an effect of change, I think.
But it comes back to Julian's point. It's about understanding those trade corridors and making sure that and people are looking for security and comfort in terms of the currencies that they're trading in and the support for their underlying business. And if they've got a series of choices in terms of strong currencies, that's a good thing from a client perspective and a good thing from a bank perspective.
Interesting question. I mean, is if and when it would ever displace the dollar, but that's years away. I mean, the impact of the dollar changing as the world's trade currency is actually kind of the interesting question that will come out there, perhaps in due course. And you go back to what happened when sterling was displaced as the world's trade currency, and the impact of that was enormous. And you could treble or quadruple that impact now if it happened. But frankly, I wouldn't have thought that was any time soon, because it's just a new currency introduction for now, which is important, but not in that league.
We live in a strangely two-speed financial services market, and we have day-to-day massive volatility, but structural change in the industry takes a very, very long time. And I suspect the impact you're playing out over 5, 10, probably longer years for that to take impact.
And it's interesting because that's one of the challenges that we've had certainly in the past from regulators and particularly competition authorities about the pace of change. But I think also from a industry perspective, the fact that this is there are multiple ends to each transaction in terms of settlement. This is this is a core business that supports trade and business generally. A pragmatic move forward is the right way to do things. It doesn't stop innovation, because innovation can happen, and it can happen reasonably quickly. But what it does mean is that your focus, and this is certainly front and foremost with the central banks, is on the systemic stability of your payment and trade platforms, and that must be at the front of mind in terms of how you manage those payment systems from any size of bank.